In the game of loans, you either win or you learn. Welcome to the game of loans, where fortunes are forged and empires are built. Your hosts, lords of lending and wholesaling, are here to guide you through the realm of real estate and wealth building. Brace yourselves, cash flow is coming. Welcome to episode 16 of the Game of Loans. It's my pleasure to have Brady Thomas out of Oakland, California on as my guest. So this is the first time that we're doing things like this. I don't have a guest in the audience over here. We're doing it remote. Brady, thank you so much for making this happen today.
Yeah, man, I appreciate you having me.
Oh, of course, excited. Of course. So Brady, tell me a little bit about you, when you got into the business, so on and so forth, how long you've been in the business, what type of business, what type of loans do you do? Because everybody knows what I do. I'm a private money lender. Explain to them what it is that you do.
Yeah. So again, my name is Brady Thomas, and I've been a mortgage loan originator for a decade and a half, and my business is in Oakland, California. In that time, I've been fortunate enough to have some success. Over the last 10 years, I've been, a top 100 producer in the country, which just means I've been able to help a lot of families get into homes and build wealth through real estate. I also spend a great deal of my time working with real estate agents to help them with their business. I have some background in sales and in education, and I've kind of felt that the mortgage space is a really good place to be able to display both of those. So the type of mortgages that I do are what you would consider conventional conforming residential loans. So people come to me when they're hoping to buy a home for their family, when they're trying to scale up, maybe keep their home that they've been living in and buy another property and turn that into an investment. Folks that are looking to buy second homes, I'm your traditional loan officer. Although I don't work for a big bank, I work for a mortgage retail company.
Are you working for a mortgage banker or a mortgage broker?
Good question. So I'm actually a mortgage banker,
okay.
And I've been that the whole time that I've been in the business, about 15 years. Now, we do broker. We have the ability to broker when necessary, but a good majority of the loans we run through our same process, so I keep it in my same mortgage bank, and that's just for efficiency and scalability for the most part.
So I just want to explain the difference. So
Yeah.
A mortgage banker is basically you're able to originate the loan and you're going to underwrite the loan in-house.
Yep.
The mortgage bank is going to use their own funds to fund the loan, and then some mortgage banks, if they're large enough, they'll hold some of those loans. But for the most part, 90% of mortgage bankers end up selling those loans into the second market. But as a mortgage broker, you're basically that. You're just brokering a transaction. You're referring it to another mortgage banker or bank, right? And They're doing all the underwriting, and there's less control in the process.
And it is to keep it in the game of loans, like this is the Lannisters versus the Starks of the mortgage industry, is banking versus being a broker.
Right.
You'll hear pros and cons on both sides. For me, I like the advantage of having the same people that I work with on every single deal, the same underwriters, processors, doc jars, because it creates consistency. There are some people that will argue being a broker gives you the ability to hold people accountable and go to different banks or different sources when you have it.
But it's full of shit. Let me tell you why. I'll tell you why, from my experience. Because are we Lannisters or are we Starks? What are we doing? As bankers?
I think I'd rather.
I'm a Stark. Let's be Starks. Fuck the Lannisters. So let's talk shit about the Lannisters a little bit. So the mortgage brokers, they always make that claim, right? Where, we're going to hold people accountable, and we're going to do this and do that, and we get to have the best pricing, right? But if you speak to any successful mortgage broker, right? They're not giving fucking loans to 200 different places. What are they doing? They have one guy or two guys maximum, and those are the guys they're using, right?
Yeah, for sure.
Which to me, it's a joke. It's like you're making a claim that I have 2,000 outlets. Yeah, you have 2,000 outlets. but you're using two guys because if you spread the business around to 2,000 people, which you don't have that much business, you're not going to get any sort of, you're not going to get the service that you need to give to your client, right?
Yeah, absolutely.
So,
It's 100% true.
right.
And in the job, when you have a family who's expecting to get keys to move into their home in 15 days, you don't want to go try one of the 2,000 other options you have out there. You want to go with the people you know are going to get the job done. And so, and this is at the heart of this whole question, which is what is the value that a mortgage loan originator provides? If you are just talking about who has the lowest rate, then you have to compete in that space. But if you can get your clients to understand the value you bring is not just rate, but there's education, there's reputation, there's responsiveness, there's service. That's when it starts to be really simple to explain to them, why you choose a certain platform to work with versus others.
And look, I agree with you, right? So I would say in my space, it's similar, in the private lending space, but less because I'm dealing with business individuals, right? I stopped going directly to the consumer. I just don't do it. But, I used to be one of the largest. I actually, I was the largest. I owned the largest privately held non-QM retail originator in the country. Okay. And, my whole life I was just, I've been in the business for 33 years and I was, an FHA lender, conventional lender. And then what ended up happening was, we had these guys on the FHA side with 600 FICO scores. I told the story, and the guy's complaining about an eighth of a rate. And I want to be like, dude, you're lucky you're getting into a house, But I just didn't want to deal with that. And then when we got into the non-QM game, and when we were helping people out, business owners that didn't know that they could even qualify for a mortgage, right?
Right, for sure.
I didn't have much competition, right? And these guys would walk away from the closing every time and be like, "Hey, man, thank you so much for what you did." It wasn't. My cousin ended up getting an eighth less, last month. You screwed me. Like, are you, I think the mortgage brokers have kind of glorified the whole rate thing, right? And not the service. And I agree with you. And they're not going to get someone like you. They're not going to get a professional that's on their side.
Well, so that's actually a really interesting description because in the last 7 or 8 years, I've really crafted my business around this idea of the 2-home tango, which is, in my mind, the delicate dance of buying a home when you already own a home. What I realized is if I just go and try to compete with Joe Schmo, at Loan Depot or whatever, the client doesn't really value the service because maybe they're a first-time home buyer and they're locked into an FHA loan regardless, so they don't see that there's different programs and products. Or perhaps they've just been told to shop around. Now, when you already own a home and you're trying to buy something before you've sold, you walk into Wells or Chase or Citi or call Rocket Mortgage, they can't figure it out.
No.
But then when you talk to me and we come up with a solution, I've already demonstrated value. So now it's not about who has the lowest rate or any of that, my cousin told me to call 10 different lenders. It's, oh my God, you provided a solution for me that I did not know was there. And the whole conversation has shifted. And so I actually talked to the agents that I work with and the mortgage loan originators that are in my office about having some niche that you can be passionate about that actually adds value where the clients can immediately see that you've provided something to them that they couldn't get elsewhere. And then the game's over. Then you have clients for life.
Listen, I agree with you. And I think when you create that niche, that's important because even in my business, sometimes we'll listen to, not sometimes, I mean, we're always QCing conversations, right? From the salespeople. I always explain to my salespeople, like, never lead into a conversation with anyone straight out with rate, right? Because
no.
That's not why they're calling you. Why are you even bringing that up, right? Why don't you listen to the conversation? You're offering the guy a cheeseburger, right, when he wants pizza, right? You don't even know what he wants. Maybe he wants a fucking ice cream, right? He's talking about a cash out refinance. Can you cash me out, right? Or I want, can you tell me about a ground up construction deal and you're throwing the rate out? The fucking guy
Yeah,
didn't even ask you the rate, right? Like,
exactly. Yeah.
it's just not, and more important, I think, and this is why a lot of car salesmen that come into the business usually do really well, is because if you listen to the pitch that car salespeople give, they are never talking about the rate. You know what they're always talking about?
The payment.
The payment.
Yeah.
Exactly.
You're right.
And when you lead out with the payment, hey, man, can you afford this? And they say yes.
Right.
It's a whole different story, right?
Right.
I got you what you need. You wanted to cash out. This is your payment. How does that sound?
Well, and I have to imagine for you guys, you get two types of clients. You get one, somebody who has tried elsewhere and been told no, and they've already been chastened and they know that they have to come to you to get it done. Or two, somebody who's sophisticated enough to know they don't even need to go try elsewhere because you're the only one who's going to do it and they have experience. So you guys are probably getting teed up in a way where it's like, look, you have a bigger problem than rate. These are all the hurdles we have to get over before we can even talk about rate. And being able to, I think some of that, and I know because I've listened to some of your stuff and I watch your social media, it's just confidence. It's just knowing that you are providing so much value. You are solving a problem that they might not even know they have. And so that's the education, is around people that aren't even aware. They might understand they have a problem. They have no idea what the solution is. And that's when they get to you at that stage, it's a lot easier.
Correct. So for our business, remember, I'm dealing with more B2B, right?
Yep.
Although they're borrowers, obviously, but they're real estate investors.
Right.
And for real estate investors, and I if you watch my stuff, I had something where it said, real estate investors are always, they're asset rich, cash poor. So more important than rate in my business is how I could give them more leverage, right? That's important. So if they're going to my competitor and the competitor is saying you need to come into the deal with less money, but it's at 14%, I'm telling them, hey, I'll give you 12%, but you got to come in with more money. Believe me, 100% out of 100%, you know what they're doing? Going to somebody else with the higher leverage, right? And so my business is a leverage game. Sometimes, once in a blue moon, like if I'm dealing with small-time fix and flippers, then it becomes a rate and point game, because that's a commodity. They could always go to these assholes at Kiavi, and those guys are going to always beat my rate. But what I tell them, it's also relationship. It's, look, I got a deal Monday, right? The guy wasn't happy with what he was quoted at another private money lender. Mm-hmm. So he got to me, actually on my IG account. He said, Steve, I have to close this deal by Friday. Can you make it happen? I said, do you have a full package? Did they do an appraisal? Yes. No problem. Guess what I'm doing? I got the deal on Monday. I'm funding it for him by Friday, right?
Yeah, right.
And that's service.
Yeah.
And I think in my business, service is more appreciated than in your business, unfortunately, right? Where it wasn't, that wasn't the case. You're a young guy. I've been in this business since a long time, man, right? So when I was doing your type of business, actually service was appreciated. It really was. It was more because we didn't have that much competition. There weren't that many mortgage bankers, and no one, believe me, nobody was going to a mortgage broker when I was in the business. Like if you're a mortgage broker, you were just a brokester, right? Only the dread of society would go to the mortgage broker because there was something wrong. Right?
Yeah.
They couldn't go to a mortgage banker because there was a problem with them. So they were like leopards. Like, if you got a deal from a mortgage broker, you already knew there was a problem with that deal. Right. It's not like that anymore, but they've kind of taken the service out of the game, and it's great. So tell me, you said that you had that strategy. What is your? Can you explain your strategy, or is it your secret sauce?
The idea of the 2 home tango?
Yeah.
No, for sure. So it's nothing that you're not going to already intuitively understand, but because I understand it and I feel like I can explain it pretty well, that's my competitive advantage. So I use it in 2 ways. One is what you're talking about, B2B, talking to real estate agents and making sure when they have a client who owns a home maybe needs to downsize because unfortunately the other spouse passed,
Right.
or maybe they've outgrown the home because they now have a third kid, or whatever it is, they want to move. I am the person to call to help that family or that person buy a home before they sell, and who's been told no elsewhere. So I make sure that agents know that I'm the one to think of when you have the two home tango. I try to drill that in. It's in all my marketing, all of my advertising. And then the other part of it is what we call the B2C, is just directly to consumer, and making sure that I can explain it to them in a way that they get it. So the way I start is I kind of ask a bunch of questions because I need to understand their situation to see if they're even a candidate for it. And I always start with this idea that, look, you can sell your home first. Like, you might have to move twice. You might have to sell a home that you're living in. You might have to make a contingent offer, which in California is really difficult to do because sellers have many offers in front of them.
Right.
But you can always sell your home first. And if you do that, you'll own one home at a time. You'll release the equity. You could walk into any bank in America and they can figure that out. What I'm trying to do is help you figure out a way to buy a home before you sell, or to buy a home and keep your property as an investment. And in that case, you have two options. We have the Steve option, which is private hard money. They're not really going to look at your income. They just want to understand how you're going to pay them back, in what timeline, and you pay a surcharge for that. You pay points, you pay a higher interest rate, but it's easy and it's straightforward. Mm-hmm. The other option is using a traditional lender and buying a home with a traditional 30-year fixed or 7-year arm before having sold. And if we do that, there's two hurdles. One, how do we come up with a down payment? Do you have a down payment yourself? Can we get a home equity line? Can you get a gift from family? Can you borrow money from somebody in your orbit? Do we need a private bridge out of your house? And then two, since we're using a traditional loan, how do we then get you to qualify? How do you have enough income to cover two mortgages, two sets of taxes, two sets of insurance? And so what you'll know is, for a traditional Wells, Chase, kind of conventional Fannie Mae, Freddie Mac mortgage, it can be difficult to qualify for two homes at once unless you make a good amount of money. But non-QM, there are a number of non-QM lenders that play in this space now, and they will allow us to completely ignore the monthly payment from that departing residence by the client just writing a letter stating their intent to sell within 90 days. So we don't have to create a liar lease. We don't have to provide some tenant that is supposedly going to move in. We don't have to get a listing agreement. There are some lenders that we work with that will allow us to do that. And we probably do, I did 200 loans last year. I probably did 30 or 40 loans that way.
Wow.
Where we help them come up with a down payment. We use that down payment as the money for the new purchase, maybe by pulling cash out of their home or through a family member or friend, or sometimes people have the money and the income and they don't know it. They can leverage against their assets. But we come up with a strategy, and then I can send them back to their agent and say, hey, we have a way to make a non-contingent offer when you find something. It doesn't require private money. I'm not charging them 2 points and 12%. And that value, that's like, it's golden at that point, if we can figure out a way to do that. And so the non-QM space has become a huge playground for my business because those lenders will do things that if you just understand a Fannie Freddie FHA loan, you would never think possible, but there's so many avenues to do deals that way. So
look, I'm so happy that people are into non-QM now, right? Because when I was doing it I started doing non-QM. I was actually, believe it or not, I was one of the first people to create the DSCR loan. Okay?
Really?
2014.
Yeah.
Yes.
Yeah.
So back in the day, like, I'll tell you, I was one of the only games in town from 2014 till 2020, right before the pandemic. There weren't too many people doing non-QM,
Wow.
But I'm so happy that it's become so prevalent. I'm not in the game anymore. I mean, I do a ton of DSCR loans just because I deal with real estate investors, right? So it's a perfect product. If I'm lending them the money and they want to refinance out and keep the property, I'm doing DSCR, right? So the debt service coverage ratio loan is really big. I'm one of the top originators of that in the country right now at this point. And we're just getting larger. But I love what you're doing, man. It's great. There's not too many people that are willing to learn the trade, right? And move with the cheese, right? Did you ever read that book, Who Moved My Cheese? It's a great book if you haven't read it. So you got to go where the cheese is. And a lot of these guys just keep banging their head against the wall, trying to do the same thing, trying to get the same outcome, but it's not. It's, 2 plus 2 is always going to fucking be 4, right? And they're trying to make it equal 6, and it's not. It's it's the formula has changed, right? It's like you can't do it. So, where do you see in 2025? Where do you see the market moving? Where do you see rates moving on the consumer side? I know. Look, there's different sides of the spectrum, right? There's, there are guys that are saying they're very bullish because of the new administration. I happen to be one of them because I'm always an optimist. And there's certain people that aren't bullish. They're very bearish. They're saying, things aren't going to change as fast. I think, Trump's relationship with Paulson is strained, to say the least, and I think
with Powell.
I'm sorry, Powell, and I think his relationship is strained with him, and I think Powell is going to be very slow in moving rates down. Right. Yeah. At the same time, I kind of agree that he doesn't move the rates down as fast as he would have. Let's say if Kamala would have won. Right. I think if he would have done it, if he would have been pressed to do it, we would still be struggling with, with some inflation. I've kind of changed my mind. I was very bullish on maybe rates coming down a lot faster, but I think in the next 2 years until inflation gets under control, right, which is still not. I mean, it's fucking, You're in California, man. California's expensive. I mean, how much are eggs there? My cousin was showing me in Los Angeles. He went to the store. They was buying a dozen eggs for $16.
I'm not seeing that quite yet, but
I mean, maybe it was the store that he was in. So I lived in Palos Verdes for Southern California.
Beautiful
for a while. It's beautiful. Yeah. But it's expensive. I mean, even not there. Here, I'm in Tennessee. I mean, how much were a dozen eggs here, guys? It was like $10 or something, $9. Yeah. I mean, can you imagine? Like even here, when I first moved here, like 4 years ago, literally, I could tell you, I was paying a quarter for groceries than I was in California. Now I'm paying more for groceries than I did when I lived in California in 4 years. That's nuts.
It is.
That's like they've got to start doing something about that, because what people don't understand, especially in our business, and these ratios are so tight, right? Where people are like, oh, what's the difference of $400 or $500? Man, that's a big difference. $500 movement in monthly costs. That's significant for some people.
For sure. And it's $100,000 worth of buying power right there too. So
correct.
It all matters. Yeah.
So it's exactly. That's $100,000 in buying power. That's the difference between buying a house for $300,000 to $400,000. That's amazing. Yeah. So I think keeping the rates higher is going to keep the property values from jumping, right, in the next year. Because you know how it is. As soon as they lower rates, guess what's going to happen? The first thing that's going to go up is home prices, right?
Yeah, for sure. It's interesting. I always start when I try to explain this to people, I just explain to them that the United States is the only country in the world that has a government subsidized 30-year fixed mortgage. Every other place, you look in Australia, New Zealand, Europe, South America, Asia, you lock in your rate for 3, 5, maybe 7 years, and then it goes to market.
Right.
So we have I don't know how many millions and millions of homes that are permanently never hitting the market now because people were able to lock in 30-year fixed money at 2% and 3%.
Yeah.
So that's the biggest issue. Rates were too low for too long, and we're permanently taking homes off the market that will never trade.
Yeah.
So when you then talk about mortgage rates having doubled over the last 2 years, why hasn't the housing market crashed? Well, people have a shit ton of equity in their homes. They have low rates. They can rent their house out. I heard you guys talking about that last week.
Yep.
I mean, nobody can rent their house that they just bought in the last year or two and break even. But
You're right.
if you have a 2.5% mortgage on a home that was worth 300 and now it's worth 600, you have no reason to sell. So regardless of what Trump and Jerome Powell decide to do back and forth, we're kind of in a tough spot regardless.
I agree.
Because the low rates created this asset inflation. These homes have gone up so much that you have somebody who recently graduated college or has just got their first job and they're making good money. They can't even afford to get into something. And even if they qualified, that's half of the battle.
Yep.
The other part is affordability.
Yep.
Like, how do you look at these payments and say, yeah, I want to tie myself to this payment. I'm a single income earner. It's just really tricky. So I think that like just structurally, we're in a tough spot. Affordability is going to be a challenge. As it relates to what can be done, I honestly don't know. Like, yeah, I would like to see interest rates come down, but the Fed doesn't get to control rates. They're on the short end, they're on the short-term bond side. Mortgage rates are determined by the long-term bond market. And as long as inflation is running hot, as long as people can get huge returns in the stock market, none of these bond traders are going to be putting their money in bonds unless they can get higher rates of return. So that those bond yields have to stay high. So, I think there is a scenario. I will tell you my personal bias is I'm not a huge Trump fan. I don't like the way that he operates, but dude is like, he will put pressure on your ass. And so I think there's going to be he's put Jerome Powell in a real tough bind. But with the tariffs and, these deportations and possibly even looking at tax cuts, like that all puts inflationary pressure on the market. It's going to be tough to see interest rates, mortgage rates come down in that world unless, and I don't think any of us want to see this unless we have a real true recession. And that kills inflation and prompts everybody back to action. I mean, I think that's the one, to use the game of loans, like those are the White Walkers on the other side of the wall. If they crack through the wall, all bets are off. If we have a recession, all of the other stuff we're talking about, posturing and inflation, like all of that goes out the window because we'll have to cut rates to spur the economy back to action. And maybe that is the solution that kind of, as painful as it will be, it solves our problem in the real estate side.
So I think, again, there is a lot of divisiveness when it comes to Trump, right?
Yeah, for sure.
And there's, obviously the way that he might speak and stuff like that. But I got to be honest with you. I think that with what they're doing with Elon, for instance, by them going after all that fluff that's right now in the federal government on the spending side,
right?
When they start cutting those budgets, it's going to have a direct relationship to inflation, right? And if they could just get in there and they could just, there's a lot of corruption, man, and it's been going on for a long time. For sure. And there's a lot of people that just it's a money-making machine, There's a reason why politicians are buying $9 million homes with $125,000 salaries, right? Military contracts, all sorts of contracts. They're right. Selling, I know a guy that was selling flags, okay, that were made in China back to the United States government. He's spending $10 and he's selling it to the government at $1,200 a pop. Think about that. I mean, how did this guy get the contract to be able to do something like that?
Right.
Right. It's pretty crazy. I know other people that are in helicopter parts, right? They're buying helicopter parts and they're selling them at like 1,000% markups back to the military.
Yeah. We saw that a lot during COVID too. That was like the examples of the masks
crazy,
and all of that stuff. Yeah.
So I think reducing the budget in the government, taking money. So what that does is you're taking money out of the economy when you do that, right? Just fluff money. Because if you're putting, if they're putting out billions of dollars of money because that money goes back into into circulation,
Sure.
right?
Yeah.
Think about it. So where is inflation? There's too much money, right, out in circulation. You got to bring that shit back. And at the end of the day, I think politics plays a big game in it. People don't like Trump, and if it was somebody else that was trying to do this, I think it would have gone way better. But no one really wanted to tackle what's going on with that part, with all that excess money that's going from our taxpayer dollars back into bullshit, contracts and everything like that that's flowing back into the economy, right? So now start taking those billions of dollars out of the system. You're going to see a big correction in inflation because that money is not going back into circulation. And I think that's really important. And, regardless of how people feel about Elon and how people feel about Trump, I think, by them doing this, it's necessary. It's necessary because it's going to reduce the amount of money that's being circulated. And we really need to do that,
Yeah, I mean, if it can be done in a way where some of the critical structures of the government, then I think that's the hard part is you may be able to pull 9 out of 10 of the Jenga blocks, but that 10th one, if it was necessary to hold up the whole structure, could be a problem. And that's the only thing I do worry about is, Elon's going in there and we're 3 weeks into it. He's already thinks he's figured everything out. I mean, this is like forensic accountants take years to understand what's going on. So that's what I worry is there's going to be a bigger issue by just willy-nilly cutting things. But we'll see. I mean, we're living through history, as they say. Like there's decades where nothing happened, and there's weeks where decades happen. I feel like we're in that period right now where decades are happening. We're
in that period, and no one's going to be perfect, right? And but obviously, I'm a businessman, right? And as a businessman, I'm just tired. People are like, "Are you a Republican?" I say, "No, I'm a capitalist." Right. I'm not. I'm all for less federal government, more state government, and let us have a free market economy. Look, I watched one of your podcasts. You were talking about the CFPB. I never had a good relationship with the CFPB.
Yeah,
and I agree. I tell you, man, go speak to the owner of your company. He probably or she doesn't have a good relationship with the CFPB.
Sure.
I think that I think I've been in the business for a long time. Okay, do I think that it was perfect before 2008? Absolutely not. But what ended up happening is they created laws and enacted TRID through Dodd-Frank, and typical of the federal government, they weren't experts in mortgages to understand what went wrong.
Right.
Right?
For sure.
What happened? They just came up with these arbitrary fucking laws and stuff like that, right? And I'm not saying that there shouldn't be any oversight. I'm not saying that. But every time we would have something with the CFPB would come in and arbitrarily, just because they need to make money, hit us up $10,000, $15,000, and fine us for nothing.
Right.
And I don't, I never had a good relationship with the CFPB. Thank God I went into private money lending just to get out of their grip. I couldn't do it anymore.
Yeah.
Just because here I am, I'm speaking to people that know nothing about my business, that are regulating me, that know nothing about anything. So I get what you're saying. I understand your point about it potentially harming the consumer, but at the same time, being a businessman and being a mortgage banker, feeling the wrath of the CFPB, like the Gestapo, it was really bad,
Yeah. No, I mean, I'll tell you, so about 8 years ago, the mortgage bank I was working for at that time went through a CFPB audit, and I was one of the top producers in the company. They wanted me to come in, sit with the auditors, and to your point, Steve, these people were asking me questions, and I was like, you're the auditor. Like, you don't understand how this works. You don't understand what order of operations we go through when we're taking an application. And they were just hitting on the, it's because they didn't fully understand our business. The questions they were asking were so leading. Like, do you ever have anybody offer to send you a deal for direct kickback? I was like, no, first off. And second of all, like, if you're trying to catch me in a gotcha, that's not, that's not the way to do it. So, I mean, I get it. I will tell you, I came into the business in 2010. So I was after the mortgage meltdown, and I had a period of time where I was selling commercial real estate before that. I then taught English in Central America. And I got into the mortgage business, how many people do, because I had a connection through family, and I was going to do it for a year and go to grad school. And then I remember halfway through that first year, I was working on somebody else's team, and I had this realization, like, wait, you mean to tell me all we have to do is provide excellent service to these buyers, and their real estate agents will continue to send us business? I don't have to go cold call like I did in commercial real estate for every transaction. And that's when it dawned on me. I was like, this is an amazing model for me, like the business to business part of it, and helping consumers, which I really thought was important, especially, being Black American. Like, I know that our people haven't been able to access competent mortgage solutions historically. So I felt like I really enjoyed that business. And so the CFPB, I've seen, when you said, the person that owns the bank that I work for sure. I mean, I hear that loud and clear. And I also hear it from people who have been in the business 30 years and know that it can be done well without the oversight regime. But I also do see the benefit from when I started with the old Truth in Lending and the GFE to kind of like the loan estimates and the closing disclosures that client gets now that are a little more clear, that are a little more helpful.
I mean, I've been in the business. I think they just convoluted everything. I got to be honest. I'm going to disagree with you on that. No, but I'm also look. I'm all for small businesses, right? I'm all for you. I'm all for you. I'm all for the company that you work for, right? Yeah. That you work with. And I think the CFPB was created to just put a chokehold on small guys like us.
Yes. It's definitely caused that. You're right.
Right? Where they're what are they doing with Chase? Or what are they doing? Those guys don't get regulated like we get regulated. And when they do, it's a slap on the wrist. When they come after us, they're coming hard, Mm-hmm. And I've seen the CFPB put some people out of business. And they didn't deserve to be out of business because they're not thinking. There were processors that worked for those businesses. There were people that were, hired in the community that worked for those, for those businesses. And I was never a fan. I just, when I heard that they were cracking down on the CFPB, I was ready to start popping bottles, finally, thank God, these guys, they just, every audit, like you're saying, like I was astonished. I'm like, you're having this idiot that knows nothing about my business question me on my business. It's like me sitting down and, I know nothing about medicine, and here I am. I'm trying to audit a doctor. Like, what do I know? Like, about a brain surgeon or someone like that. To me, if they were giving a real benefit to the consumer, I would see that. But let's talk about this. One thing I do agree with, I think that we should have regulation when it comes to loan officers, right? I do agree with that. I like the whole creation of the NMLS. I think that was great, But I find it funny, and you're a minority. It's loan officers are regulated, but police officers are not.
Right.
And I think that's a joke. Right? So here I am as a loan officer.
Sure.
I'm regulated by the federal government, but a police officer is not. How does that happen? Right? And I've been saying for the longest time, you created the NMLS for people like us.
Right.
Created similar thing for police officers. I have a pen and they have a gun.
Right. Right.
I'm giving them money to buy a house and they're there for public safety, right? So just, I just think it's disproportionate a little bit,
Yeah.
You know what I'm saying? Like here we are, we're regulated like crazy. We have to take continuing education. We have to do this. We can't lend in every state, right? Like we're under the gun. We have the CFPB on our asses on a regular basis. And then you have guys running around with guns. How come they can't create that for them?
Yeah. Well, you see it too when a police officer will get disciplined or fired in one city and then get rehired somewhere else.
We can't do that. Can you do that?
No, not at all. I mean, your NMLS license pops up and you have a disciplinary action, you're done.
You're finished.
Yeah.
So and I get it, and I'm not, I think what happened in 2008, I think that was, it was bad, but that had more to do with the guys on Wall Street than it did with guys like me and you.
Exactly.
You know what I'm saying? But how many people do you think got thrown in prison in Wall Street? Not one person. Do you know how many loans? I was trading loans. I was trading hundreds of millions of loans to these guys, right? Waving them in.
Yeah.
Do you think one person, even one person on Wall Street even got a slap on the wrist? Meanwhile, you had loan officers that got prosecuted. You had mortgage brokers that got prosecuted. Some of them got 15, 20 years in jail. Again, I'm not saying maybe they should have, maybe they shouldn't have. But the real kingpins, nothing happened to these guys,
Right. And those loan officers.
And then they created the CFPB. They created, the NMLS to regulate us. But then they put nothing in control on this on the Wall Street side. Mm-hmm. And I just, it's the way it goes, man. When you're the small fish, they're going to step on your neck, right? And I'm all about them not stepping on my neck and not stepping on your neck, because you don't deserve that and I don't deserve that. And like you said, you're here and you're an African American and you want to help other minorities. These guys, when they're walking into Chase, minorities aren't getting the same treatment as they are when they come to people like me and you. Those are facts. That's just how it is. It's the truth. People could deny it or they could not deny it, but that's a fact. It's a fact. Yeah. Why do you think that, places like Chase and places like Wells Fargo, they have to go out there and they have to buy loans, right, from companies like yours to satisfy their minority lending criteria?
Right.
Because they're not lending them the money internally.
And that's actually a good point. I've been talking to agents about this quite a bit. The Chases, the Wells, Citi, they offer these smoking hot deals in some of these low to moderate income census tracts right now. And I get agents reaching out to me because we have a few of those lending options. And they're asking, like, why can my client get such a low rate? Why is there no mortgage insurance? And I say, because that lender got dinged by the federal government for discriminatory practices, and they have to lend in these certain areas. And so the only way they can attract a client is to offer a below market rate, because if they offered the same rate as everybody else, they'd go with a traditional mortgage banker or a broker, but they have to undercut the market in order to get these deals. And so it ends up kind of helping certain subset of consumers, but there's a story behind that. They're not doing that out of the goodness of their heart by any stretch.
I agree with you wholeheartedly, right?
Yeah.
And even the funny thing is, even with those specials, guess what? They still don't hit their marks. It's so again, as much as we're looked as the enemy, we're not the enemy. We're never the enemy. We were always there. If it wasn't for us, 3/4 of the population wouldn't get served, and that's a fact. I'll even go further to say it has nothing. It has less to do with race or ethnicity or more to do with socioeconomic, right?
For sure.
And
For sure.
right? And if you're in a certain socioeconomic state, you walk into a bank, you get laughed at. You walk into someone like you and me, we're gonna figure out how to put you into a house any way we can. So your strategies for homeowners. Where do you see, like, what are you pushing this year besides I like what you're doing with the non-QM and putting them in and being able to either hold on to the low rate and rent that out and put them into a new house, so on and so forth. Are you pushing any on the any no points or buy downs? Like, what's your strategy moving into 2025?
Yeah, so a couple things. One, when I sit down with clients, I oftentimes will tell people I'd rather talk to you a year too soon than a day too late. Like, I want to have that conversation with you. If you have a goal of homeownership, come in and sit down with us. It costs nothing to go through your goals, figure out a plan, see what you qualify for now, see if you can afford the payment. Because we never say no, we always say how and when. So if a client cannot qualify today,
Right.
let's come up with a strategy. What's the issue? Is it credit? Great. Let's get these collections knocked down and wait 6 months. Or, hey, let's figure out a way to save for a down payment. So I look at my job as being consultative, of trying to help people navigate this maze that is the mortgage process. For the things that I'm doing with clients today that are perhaps different than what I would have been doing in 2020, 2021, I realized about 18 months ago, I had a client who was in contract to purchase a home in the end of 2022. She had been looking when rates were in the 3.5% range. When she got in contract, the rate was 7%. She made a non-contingent offer, got her offer accepted. We had loan approval, ready to close, and she bailed. She walked away from her deposit, 42 grand. On $1 million for a purchase, she walked away from her deposit. And it made me realize at that point that I had actually failed her. I took that personal because when rates were at 2 and 3%, everybody intuitively understood why they were buying. There was a certain velocity to the marketplace of everyone's doing it. It makes sense. I see that there's a record number of sales. But when rates doubled, people needed more education. And so I kind of changed my business at that point. I'm making first-time home buyers get on a second conversation with me after they've been pre-approved, after we've given them their qualification and their affordability, worked with them on their numbers. We do what's called a pre-approval success call. And this is really to talk to them about mortgage rates and how they move. We talk about what it looks like to buy points, and should you be paying points to buy down your rate in a high rate environment. We talk about the benefits of homeownership, the questions they should be asking before they make an offer on a home, the ways we can help them eliminate competition with their offer, things we can do to help negotiate better terms like seller credits or lower closing costs, lower price point. And then we talk about what it looks like to refinance so that they know that there's some strategy down the road. If they do decide to pull the trigger, how do we then better their situation in the future? And that pre-approval success call has been a game changer. It requires a little more work for us with each client, but we found that it takes away when we first started this conversation, this idea of, well, you gave me a rate of 7% and somebody over here online gave me a rate of 6.875. They wouldn't even come back to me with that. Right. Because they know we've done so much for them to show them, make them understand why they're doing this and how it's going to happen and how we're going to support them in the future. We offer to cover their closing costs on their refinances, not just the first one, but as many times as they need to until they pay the loan off. Like, I want to make sure my clients can take advantage of lower rates when they're available and not have to worry about paying the cost. So we've done a lot of education, and I think that is what it takes, because I don't ever want to have a situation where I get that phone call from a client saying, "Hey, Brady, I'm backing out. Like, it doesn't make sense to me." If we get to that point and they're having those feelings, hopefully they can go back to our original conversation about the benefits of homeownership and why we're doing this and the questions they should have asked before they make an offer. And so I want people to be more committed and really feel like it's the right thing for them rather than chasing what they were told to do online or from a family member.
I love your approach, man. Honestly, I love it. I think you're one of the few loan officers that I've come in contact with that's actually a professional, and that obviously shows because, like you said, you're top 100 in the country, and that's amazing. And I think that
Thank you.
That education part is missing. A lot of these loan officers, they're just selling rate, and that's why they're losing and they're suffering, right? And what I try to explain to people when they speak to me about, well, do you think I should buy a house? Because I still get calls, right?
Sure.
And I explain to them, I say, look, you're going to marry the house. You're just dating the rate, right? And if you could afford the payment today, then definitely go for it, because the rates are only going to get better at some point, right? And then when the rates go down, you bought the house at the right price point, because right now prices are pretty stagnant, right? They're not jumping. When the rates go down, you might get a lower rate, but you're buying a more expensive house.
Exactly.
So, don't be so fixated on what's my rate. It's what's my payment? Can I afford the payment? Right? And, if I could afford it, the payment's only going to get better. It's not going to get worse. Right? So, and that's important.
Yeah. And you can't refinance the price.
Right. Correct.
But let me tell you, I bought a home. I have a 3-year-old. We bought our current home in November of 2021, right before he was born. That house that we bought, we have a 2.5% rate. But my home, because Oakland's been a little different market than the rest of California, my home, I could not sell for what I paid for it today.
Okay.
I'm not going to sell, but I couldn't sell it for that amount. So what I have is a situation where, boo-hoo, poor me. I will never be able to get my payment down because I have a 2.5% rate. I'm never going to refinance that mortgage. But that payment is what it is. If I had bought the same home 2 years later, and maybe my rate was 5, 6, 7%, I could refinance that rate. I'll never be able to refinance that price that I paid at a premium in 2021. That is my basis forever.
Right.
Whereas somebody who could get in now might be able to get the home at a lower price and then take advantage of rates in the future. So I tell people that all the time. You cannot refinance the price. If you end up waiting and you have to pay a premium to get back into the market or to get into the market, that's what it is.
Man, honestly, just so you know, I'm going to steal that from you.
Yeah.
But I'll give you credit. I'm going to say my friend Brady said, you can refinance the rate, but you can't refinance the price. I love that.
No,
I really like that. You're right. That's great. But even for you, I'll tell you, don't be too sad, right? Because you're in Oakland, prices are gonna, when rates go back down just a little bit, prices are gonna jump. You'll be, but like you said, you're never gonna refinance that rate. You're never going to. You're married to that for life.
And my strategy has always been buy and hold. So I have 4 properties all in Oakland, each of which I lived in for a period of time. So my first purchase was right after I got in the business.
I love that strategy.
I bought a condo.
I love it.
I lived in it for a while, pulled cash out, used it as a down payment to buy the house that I eventually ended up moving my then girlfriend, but now wife into. We lived there for a bit, did the same thing, moved out, rented it one additional time. And then in 2021, we did it for the 3rd time on our 4th property. And so
I love that strategy.
I've always just figured hey, as long as what I'm leaving behind will break even, I can get a tenant in there to cover my expenses. I don't ever have to look at the values because, where you run into trouble is you can rent it for $3,200, but it costs you $5,000 a month. And now it's like, okay, as long as values go up forever, sure, I can understand paying $1,800 a month to see my values go up. But when values flatten out or go down, that's the people that panic, they bail, they walk away. And so my strategy has been make sure I can cover my expenses. Obviously, make sure I already know I want to, but if it's not me, if somebody else, make sure you want to be a landlord. Mm-hmm. And then you have to be willing to leave that money there because you're not going to have ready access to it. And it's a long game. It's a long play. So,
but that's the way to build wealth. I talk a lot about these guys on the internet that try to talk these people just to rent for life. And I think it's such a shame because, it's just, and that's what they're preaching, man. That's what they're preaching to the new generation. And what people don't understand is what you understand, that the long-term game, right, that you're playing is you're building wealth for the future, right? You're leaving something for your kids and maybe your grandkids, God willing, right, at some point. And are you taking advantage of that today? No, like you said, it's long-term, and you're going to get that appreciation over time, right? But, man, you've been in the business 10 years. You're going to blink your eye. There's going to be another 10 years. And think about how much those prices are going to increase in 10 years, right? Yeah. And all these, fake gurus on social media preaching to the new generation, like renting is better than buying. Don't do this, don't do that. It boggles my mind because these guys are so impressionable and they're believing this bullshit,
Right.
And you're living the opposite. You're living the opposite. You're doing exactly what you're preaching. And I love that, man. I love it. I love that, you're in your fourth house. You're probably, by the time you're done, you're going to, maybe you'll have 20 houses down.
Yeah, I would love to. I mean, I think you're spot on. Look, I try to have a nuanced approach. Not everybody should be buying a home at every point in their life. There are reasons to rent. There are benefit for sure to being a renter. When I talk to people, I tell them I have 3 magic questions. Before you make an offer on a home, I want you to be able to answer in the affirmative, answer yes to these 3 questions. 1, do you love the home? Mm-hmm. Flat out. Like, don't buy a house and then call me back in 6 months and say, oh my God, I hate the neighborhood. We need to sell. That's a disaster.
Right.
If there's a train track in the backyard and that shit comes by at 4 a.m. every morning, make sure you're okay with that. Like, make sure you really do like the home that you're going to live in. Number 2, can you tell me that you're going to stay there for the next 5 to 7 years? Right? If you end up buying at the top of the market, like I did in 2021 in my area, if I was trying to sell 2 years later, I would have taken a loss. Mm-hmm. But I'm not. I know I'm going to stay in the Bay Area where I live. There's no more land to build. We have a dynamic economy. People want to be there. These values are going to come back and they'll exceed what I paid for my home. And so having that longer horizon protects you against any, volatility. And then finally, can you stomach that monthly payment? That's exactly what you were saying, right?
Right.
If rates don't come down as quickly as we expect or hope, can you hunker down, make the payment? Sure. We love for rates to come down, but do you feel good about your earning potential, your job prospects? Like, if you can answer yes to those 3 questions, you don't have to be smarter than Warren Buffett. You don't have to outsmart Wall Street. This is an investment for sure, but it's also the home you're going to live in, and it's just a way to reduce risk over that near and long term and put yourself in a position where you can say yes to a home rather than always thinking about the dude on social media that told you that home ownership is dumb. Like, nah, that's not the way to go. You can't live like that.
I love it. I love it, bro. Well, I want to thank you for being on the show. Let's, I'd like to have you back on again. I like this a lot. Hopefully you come down to Nashville, you visit us here, and, maybe we do something live together one day. Or if I ever make it to Oakland,
Yeah.
I haven't been up. I used to go to San Francisco a lot.
Nice.
But Oakland, I think I went to once. So, but if we ever make it, we make it.
Yeah, for sure, man. I would love that. Thank you for having me.
Of course, man. Of course. And this is it. This is episode 16. This is my new friend, Brady Thomas. Brady, let's be in touch. We could do some business together too.
Yeah, man. Thank you.
All right, brother. Thank
All
you.
right, you guys.
You've been listening to The Game of Loans, where real estate battles are fought and won. Make sure to fortify your defenses by subscribing. Cash flow is coming, and we'll be back next time to help you claim your throne. The war of wealth continues.